don't believe so. I mean, yes, perhaps to some extent, but I don't think that it's going to be a big impact. It really depends, very importantly, of course, how interest rates react. And I don't think that bond yields are going to react a great deal. I mean, first of all, we've seen over quite a few years now the so-called bond vigilantes being pretty much absent. Debt to GDP ratios, for instance, in the United States, or certainly in Japan, have continued to rise, and bond yields haven't really increased much. Secondly, you made reference to it earlier on, the Bank of England. Central banks are in a very big way stepping up their purchases, and that should contain the rise in long-term interest rates as well. And then I think thirdly, what's important as well to note is that as normally in a recession, household savings rates tend to rise. And this time, household savings rates are likely to absolutely soar because people can't spend their money. Now, the question, I think there's a second dimension to your question, which is, now, how painful is it going to be to then later on reduce public sector deficits? Because we can't continue to run.
Klaus?
Yep.
Sorry to interrupt you, my friend. Look, hello, Klaus. Yes, look, you've alluded to something I really wanted to talk to you about, and this was, you mentioned household savings rates seemingly soaring because people can't spend any money. Well, I think even when they can spend money, Klaus, they are going to absolutely soar, certainly in countries such as the UK and the US, who have had historically low saving rates, and certainly in places like Cologne, where you did your first economics qualification, because people do not like spending money when they are fearful of their economic circumstances. And herein lies my point. If anybody thinks people are going to rush out and buy cars and rush out and buy discretionary goods when they can spend money again now, rather than now when they can't spend money, I think that's Cloud Cuckooland. People have had a near-death economic experience. They are not going to want to go out and spend a load of money, are they?
Well, that's a maybe more psychological question. I certainly, there are things that I want to do, that I want to buy, which I at the moment can't, and I'm pretty sure that when things are open again, that I will make those purchases because I have to. People are going to go to the hairdressers; they need to. Will they? You're right. I mean, it very much depends on how much the labor market deteriorates, and I think that's why the European efforts to avoid unemployment, to send people on furlough and cover their short-term income losses through public spending is actually the right track. The key thing is, I think, all in the policy implementation. I mean, I would certainly give policymakers pretty much around the world very high marks for formulating policy. What I'm not quite sure about is what is the mark going to be for implementing those policies. And we've seen certainly in a number of economies major difficulties. So I don't think it's a foregone conclusion. Yeah, you're probably right. People are not going to cram into movie theaters within a short time after the lifting, but after cooking for weeks at home, I think people will be going out.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.